We have, of course, positive momentum, good positive momentum on the 15, and it's even trending momentum. So we would take target at 3,230 on a retest of this high. Over here on this chart, you are looking at an internal level 1, 2, internal 1, 2, 3. There's going to be a fall. It will take time, no problem. Going to be a bounce. We get out at 3,234, and we do the position tomorrow. There's no point in re-entering. Of course, if you were trading Bitcoin, you wouldn't trade Ethereum. If you were trading Ethereum, you wouldn't trade Bitcoin. It's only one of either, so that we do not aggravate risk, even on the short-term scale. We would enter the same strategy tomorrow. Okay, it's possible, of course, that this is a 4A and a 4B and a 4C, but not on this kind of momentum you're having. This is a trending momentum because it is actually a bit higher than the old momentum in top out of level 3. You see, this is a level 3, so you have higher momentum spikes, more or less like a breakout here, and this means this is actually a level 5. It would also indicate that maybe we're going to be seeing a level 5 on Bitcoin too. Anyway, we would still consider to take profit at R1. All right, remember that risk matrix that we're looking at. We want really to be pragmatic and implement it and be accountable for our results on a weekly basis and on a monthly basis. All right, so it's possible we're having a 1, 2, 3, and a 4, and if you wanted to join the market, this is your trending wave. The probability is not very high, but we don't want to miss out if you did not get filled yesterday or simply were not there. So let's just use the same fibs. If we didn't get filled yesterday, we're not there. It is the same strategy that we would apply today, is to buy the pivot level, because this is a trending issue on the 1 and 4 hours, and buy 50% below S1. So I can do the internal labels. I would still fill the pivot level and the S1, because this looks like there is a higher degree wave here. There's a 1, 2 that ended here. Now there's an internal 1, 2, and a 3. This adds up into an individual 1, 2, 3, 4, and a 5 if you want to use that count. Then if this even was a correction B, so a correction C, you get a retraction back to 50%, which is the pivot level. 3,120 is a buy. The S1 is a bit tricky. You would want to get in at 3,074. So it's the same levels that we're going to buy yesterday. If I missed out yesterday, we're still buying the same levels today. And we go out at the R1 level today, 3,230. So if you're not yet in the market as of yesterday, you just have a limit entry at 3,080 above that level 1 here. We can do the labels, but I don't really want to waste time on them. So you can also see there's a 1, 2 here, there's a 3, there's a 4, there's a 5. Maybe this is a separate structure. We just adhere. The strategy itself is that if we have a trending 1 hour, if we have a trending 4 hours, you want to buy the daily pivot and the daily S1. So the daily pivot here comes in at 3,120. We leave a limit entry half size. The daily S1 is below this LS structure altogether, so most probably the structure will just test the top of internal level 1, which is 3,080. We take profit at 3,228. If we don't get a fill on these levels, we stand out until tomorrow and do the same entry using tomorrow's pivot levels. Let's look at the stop, and also let's look at where this is going. Target projections, swing term target projections. So you're looking at 2,972. This was level 1, the first wave 1 down. If this was a bearish market, these are yesterday's 50-minute pivot levels. So that is 2,972. We want to have a stop below this level. Actually, level 1 is 3,029. This one, 50% below that, is 2,972. Let's have that on the chart. So 2,972. So this ideally puts us below level 2 altogether. We are, of course, we're showing this on our own analysis. That neckline can be dropped back here if you wish. And I know now everybody knows how to get out of that position. If it turns against us, you strike the neckline. You don't want to get out. You get out on a shoulder. Even if you break below the neckline, the market could still do another head or a shoulder. We'll get out, of course, on the right shoulder as close to our entries as possible with as minimal loss, not profit, as possible. Remember, we'll have both 3,120 we will have bought 3080. So market breaks all the way to 2922. It's a spike. We get out at that right level, right shoulder, 3060, which is very close to our 3080, but with a little loss. And also this is for implementation of fixed risk situation. You want to save time and not carry negative